Well, good weekend, all. Ira Epstein, and here we are with your weekend edition of your metal market wrap-up. And this is for Friday, the 15th of September, 2023. Now, it's a big week coming up. We have the FOMC meeting. We have the Bank of England coming up. We're in the midst now of the United Auto Workers strike. We just saw PPI, CPI, retail sales, all strong, not weak. Now, if you were to just take the average person, put them in a room, and the Fed said they're going to be data dependent, and they saw these numbers, how could the Fed not raise rates? But instead, what they're going to do is take out the crystal ball and say, we know they're high, but we see down the road that they might weaken a little, so we won't raise rates now. We'll go back to the holding pattern. And my answer to that is why. I am in the big time minority. When I say big time, if there's 2% of all the traders that think that, I'm in that. Am I betting on it? Absolutely not. Let me spell that, N-O-T. I'm a chartist. At the end of the day, if I'm wrong, I played the trend broke. End of the way I define the trend, okay? That's very important. But that's exactly how I approach it. I am not a fundamentalist. I know the fundamentals pretty well. I can hold my own in most discussions, in most forums, and I do. But I understand what's going on there. And people so much don't want to see the Fed hurt it. Number one, I don't know any economist that is saying of their merit, we're going into a hard recession. If they're out there, they're not getting any press. If there's a recession, it'll be mild at best is the wording you get. So does a quarter point hike matter? No. So you're going to say, Ira, what does that quarter point do for me? It doesn't do a thing for me. Let me make that clear. It's just if you're going to be data dependent and preach that at every time you have a press conference, how do you not go for the quarter point? That will be what Fed Chair Powell has to explain if he doesn't go this Wednesday. And I'll be all ears. Whatever he does, he does. It matters to me little. I'm just bringing it out for the point of rhetoric. Now, as I said, at the end of the day, we're chartists, and that's what these videos are all about. One of the big tools you have to work with are moving averages, and I think slow stochastics and Bollinger Bands. They are so important. Momentum generally leads price. Price doesn't lead momentum the way that my understanding of charts is, and I've only done this 50 years, so I think I can hold my own in any room against that. Number two, I don't know of anything that says it has to do something, but I do know that the probabilities become immense on momentum when upside or downside momentum is lost. Immense is to the market often going back to a key level, reversing up or down when momentum is lost. I teach it in the Enhanced Bollinger Band course. You can go there, move your cursor up here. At the end of this, there'll be also my ad on it. It's iraepstein.com under the word education. And by the way, the best tool you'll ever have isn't me. It isn't all the guys on CNBC and Bloomberg and Fox and all the newsletters you do or don't get. The best one you can get is you. But what you've got to do is put the time in to make yourself educated in it. I don't care if it's the fundamentals of investing or the charting part of it. You decide. All right. As I look at the monthly close of gold, I see that the slope is down. Okay. But I have a parameter. I have a line in the sand. I like to call it that. And it's the 18-month moving average of close on a monthly chart. When the market is over that, I have an overall bullish bias. Got it? Do I tell anybody to trade off a monthly chart? I never have and never am going to. It's just too big of a parameter and too big of risks. Weekly charts are where longer-term traders invest from. And on the weekly chart, it's a flip-flop of what the monthly's showing. You have been underneath the 18-month average since May, and if you go to the charts, you've been basically down, not up. You had one peak of 21.29 or whatever, and then you went down the rest of the time. When you and I come in, we can look at it on the weekly chart, and we can see we got up here near 2,100, but there were contracts that were higher than that. But in looking at it, And since then, we peaked, and look when the peak was, just what I said, when we got underneath that. So if you come back there, you can see what the market did. On this chart, this is a close-only chart, so it's 2024, all right? Let me get back to where we were. When we come here and I put on the swing line, the swing line is a brown line that I created. It's made up of 5 parts. It looks at the prior bar. It could be a 15-minute chart, a daily chart, an hour chart, a weekly chart, doesn't matter. And it says what is the current range versus that bar. Is it an inside range? Is it an outside range up? You took out the prior bar's high and low, and you're higher than the settlement of that bar, lower with an outside range down. Do we have a higher range up or a higher range down? In other words, we didn't take out the low, we just made a higher high or a higher low than the previous. 5 rules, very simple. And it lays out and draws the line. I did it because I would get confused. Very factual, get confused. Where is the high and low in the chart? Because the first thing you learn as a chartist what is the definition of an uptrend, downtrend, or no trend? And if you can't do that, what's the point of being a chartist? Every chartist worth their salt will say in a downtrend, you have lower highs, lower lows. I have lower highs, I have lower lows. You then want to put filters on it. The first filter I use, I like the 18-week moving average of closes. You might want the 20. If you turn on CNBC, Fox, they're going to use 20. Bloomberg, they're going to use 20. I learned a long time ago that there are numbers that work sometimes better than that. You don't have to go with it. So, by the way, I was 40 years ago, doing this stuff with studies. Which is the best moving average on any one market? That doesn't work. I just need one to give me what it is, and I fell in love with the 18-week, period, for what I do. In order to break the downtrend, let's talk that because it's in one. You've got to get over 1961.10. In looking at the market, if it breaks down, there's potential support at 1852, the 100-week average, the 200-week at 1808. The trend is down with lower highs, lower lows. Where's the momentum? Well, it's not there yet. What do I have instead? What's that black line? That's the algorithm called a Bollinger Band. And in that band, notice what the market's doing. The arms are starting to wrap themselves around. When that occurs, the first thing that normally happens is volatility comes out of the market. That's what it's a sign of. If you have a market that's shooting up, the bands are going to go higher. If you have a market that all of a sudden from there starts breaking, it's going to go through and look at what the next band does and try to widen them out. And when the market starts either going higher or lower, the bands will adjust and narrow in. The narrowing in is needed because it sets up whatever the next trend is going to be. Got it? That's real important. The logic is if the Fed is through raising rates, does that mean, it's a question, not a statement, does that mean that the dollar is getting ahead of itself because rates could fall? Well, the question is one thing. The answer is very complicated. The Fed is but one part of the interest rate. They haven't been raising rates the past month, yet your yields are going to the highs of the year. Why? The U.S. Treasury. They are in the market aggressively putting out every day billions. You heard the word billions out there to fund the government. Now, you have another problem coming now that I mentioned that. Gee, it's the 15th. Do we have a budget signed for the government? Could the government shut down? So I have a lot of events in front of me. I got a potential government shutdown, and I would say that the Republicans and Democrats, they can't agree on what time it is in a chamber, let alone agree on a budget. And you're telling me they're going to get this done in 2 weeks. Okay, I think you've got to build a little bit of that thinking into your head. Number 2, you got a UAW strike, and every other union that wants to go out on strike. Do you think they're not looking at what's going on? Union memberships are not growing in America. They're contracting. And it's important that the unions make a stand if they're going to keep members and attract new members. And how do they best do that? They got to be in the public. They got to do something. That is what the UAW is doing. This new leader is doing a good job of that. I didn't say I like his negotiation skill, but I didn't say I didn't like it. I'm going to be level, but I appreciate what he's doing. I understand it. So as this market comes in, gold is caught with that. What does it say? Well, gee, if the Fed's backing out, is inflation going to be allowed to climb a little bit? And or if the Fed is out, will the dollar slip? And that's been a headwind against people wanting to buy gold. Two elements. We'll find out. What I know is what I don't want to see there, and I'm looking for support at 1893. And momentum-wise, I have a market that had been oversold. It is corrected. It's already not oversold anymore. This market is still bearish until that number is taken out. At least that's my take on it. The gold-silver ratio keeps narrowing in. I've labeled all these highs for you. And as long as the number stays over 82.12, wherever the 18-week average is, it means silver, in theory, is losing to gold. And if you look at silver, this chart's very different looking than the gold. Number one, it has fallen into a big support area. That doesn't mean it's a buy. It's fallen into it. It's at the 100-week in green, the 200 in gray. You have a higher high, lower low. Momentum, instead of what the gold just did of coming out of oversold, this market's still gradually pointing to a downside momentum. And if it gives ground here at 22.52, you open the door for 22.10. Is there anything on this chart that can create it to be bullish? In theory, there is. If you went straight up and took out 2506, yeah, that's what that number is. And then you'd have right above you 2518, the upper Bollinger Band. Certainly wouldn't be a buy, but it would be that you're not bearish anymore. In the copper market, copper is got a falling highs, higher lows, narrowing in and hugging the 18-week average. The momentum is flat. It's in the 30s. It's not oversold. The trend is what? It's mixed. The legacy is lower highs, but suddenly with this week's action, you have higher lows. I'd call it as neutral as can be, and you're stuck at the 18-week average. In the platinum market, you have the swing line up. You have moving averages that are bearish. You had a bearish crossover right through here where the 18-week got under the 100. If it wanted to finish off the downside, the ideal classroom setup would go to the lower Bollinger Band. If it doesn't want to do that, the test is what's going to happen up here. I don't think you're attracting short sellers since you're in an oversold condition. And last in the dollar index, it's won by default and beat up the world currencies. Anyone that thinks the yuan is going to be a reserve currency should take a gun to their head now. All right? Do you want to go with a government that can change its policies? 1, 2, 3. It's nice when you hate the U.S. government and you say, we're going to go create our own method. How? And nobody's proven to me that. Number two, is China, and that's a big debate, worth investing in? Well, if you're right, it is, but if you're wrong, you hate it. And number three, they don't tell you what the real numbers are. You got to play the momentum dictated by one man, the head of the government. When they gave him this lifetime presidency for all purposes, he decides who's in, who's out, what's going to happen, how it's going to happen. It is not a democracy. Don't think that it is. Don't think that they're a weak country. They're not. Do think that they're making moves to improve their economy. Go with that thinking and understand their property market is a serious issue, but so is ours. What are we going to do with all these properties? And I'm telling you, you have a dynamite keg in front of you next year. How do you refinance these commercial properties and make them work at the rates that the banks are going to ask? They're not coming in at 3% rates, 8, 10, 12%. How do you service your debt? We have a serious issue too. Just got to bring that all together. Certainly still in the bull camp, not embedded yet, overbought. I get it. All right. So as I said, take a look at this ad that's going to come up. Remember, you can move your cursor up here. Educate yourself. You're your best investment, not me, not the markets. You are. Learn. Enhanced Bollinger Band course under the word education. Go to our website, iraepstein.com. Take a look at this. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.